Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, first off, I want to thank all of you guys that stuck around and participated in last night's coaching session. Really great opportunity to just break down the overall state of the market. We spent a lot of time going over trending trades, right? So, trending stock trades and kind of like secondary trades off of that. So reversion to the mean trades or reversion to the trend trades. Just super important because we've seen countless names this quarter kind of fall into this category, right? So if you weren't able to make it, definitely be sure to check that out. It was just a great night, and again, want to say thank you for all you guys that stuck around. It's always great catching up with you. So what I want to talk about today is a name that is going to be on watch tonight after the close, LYFT, right? First report is a public company, and everybody's got an opinion. This has been actually one of only maybe a couple IPOs that hasn't performed well. I mean, it's been an absolutely incredible market for recent issues right now. I mean, JMIA, Beyond Meat. I mean, just it seems like the only one that's really not done anything has been Lyft, right? And tonight is really going to be the first opportunity to maybe turn things around. The issue with new IPOs is that you never really know what to expect. Okay, so let's start with what the estimates are. So they're expecting a pretty significant bottom line loss. So 474 and change. So somewhere in that vicinity. Revenues expected to be 744.09 million. So I mean, like those are the estimates. In terms of the expected movement, the options, so the weekly options are pricing in about a 6.25 to 6.5 point move. But the issue with that is that there's really no historical benchmark, right? I mean, like, this is its first report. I mean, like that's more of like what the line is, not necessarily what it's done in the past, because there hasn't been any past. So it may end up being expensive. It may end up being light. There's really no way to tell, right? I suppose what's most interesting to me is this tight technical consolidation it's been in, right? So you guys know that a lot of what I look for when it comes to these earnings trades is consolidations, consolidations that could lead to bigger potential, right? So it's when stocks have significant areas of support, resistance, tight technical moves that could trigger even more substantial moves if the earnings catalyst leads to a breakout or a breakdown, right? So Lyft obviously falls squarely into that category. So the options are pricing in 6.25 to 6.5, right? That would put the 62 recent resistance level in play. Would also put the recent pretty critical support area lower. So down around 56 into play, right? I mean, it's basically sandwiched perfectly in between both. So it's interesting in that regard. But what's a little bit, I guess, how I would look at it is more of like a longer term perspective, right? Um, yes, like this earnings report could lead to a nice, maybe like you get like a 10 point move possibly. That it's seen some wider ranging bars since it's come public. But what's interesting is that now that the stock has rollen over, right, and options have been available for almost a month now. You've started to see like how the pricing works. And what's interesting to me is that the longer term options are in my opinion, maybe not pricing in the potential, the potential volatility on this name. So not only is it a new issue with the earnings, but you also have its closest competitor coming onto the market soon, right? Uber. So I was looking at June options. The June straddles only pricing in about $10. So the weekly straddle's pricing in 6.25 to 6.5. Yet the June straddle, which has basically 5.5 to 6 weeks, is only priced in an extra 4 points. if you go out to July, so going on to even further, right? It's only pricing in about 12. So it seems as though near-term options are a little bit more elevated, and longer-term options might end up being a little bit underpriced, due to the fact that it's been in maybe more of a consolidation, right? You're starting to see some of like the out of the money premiums start to contract a little bit. But if you look at the chart, it seems as though if it can turn the corner, right, the next area of interest, so above 62 is 75. So right there, that's about a 12 to 13 point move. And then if that comes into play, I mean, you've seen plenty of these like really sharp reversals where you make a run at the IPO high, and that's up above 85. So um, what what I what I'm thinking for this is, maybe you try some sort of near-term put hedge, right? Just in case it disappoints, it blows out through the bottom. But longer dated options on the upside um, might be an interesting idea, right? Because the longer dated, so several months out, seem to be a little bit underpriced, just based off potential chart setup, based off some of like the ranges this has had prior to this consolidation, right? And the fact that there's not much history to determine how to price these things. Uh, so that's what I was thinking into this, right? Yes, it's interesting. LYFT, it's been a serious underperformer. Options are expensive, so they're anticipating a bigger move. I'm thinking maybe like a shorter term downside, and then possibly longer term upside to maybe take a shot on something like a month or two down the line. All right. So let me know what you think, and if you weren't able to catch up at our options session last night, let me know if you have any questions regarding that, or maybe any ideas we may have discussed last night. I'd love to hear from you guys, even if it's just, and I always say, even if it's just like bounce an idea off me, bounce like a trade idea. I mean, I'd love to hear from you. All right. So have a great night. Best of luck if you're playing anything, and I'll talk to you all tomorrow.